In the world of investments, the unexpected has occurred. Gold has shattered the $2,000 per ounce barrier, peaking at a staggering $2,200. Welcome to a new era where the luster of gold and silver shines brighter than ever before. In the last week alone, we have witnessed an incredible surge in their values, a phenomenon that has left even the most seasoned investors surprised. Let's take a closer look at these precious metals. Gold, the eternal symbol of wealth and prosperity, broke through its glass ceiling and soared to heights previously unimagined. The yellow metal didn't just stop at the $2,000 mark. No, it went further, reaching a peak of $2,200 per ounce. A spellbinding leap indeed. But that's not all. Silver, often seen as gold's less glamorous cousin, also had its moment in the limelight. The white metal saw a handsome jump in its value, climbing from $22 to $25 per ounce. This isn't just a one-off spike. All signs and market dynamics suggest that this upward trend is set to continue. So, what's behind this precious metals rally? Is it the weakening value of the dollar? Or perhaps the increasing interest of central banks in fortifying their gold reserves? Or maybe it's the growing disillusionment with global currencies like the dollar and euro? The truth is, it could be a combination of all these factors and more. The question on everyone's lips is, what's driving this golden bull run? Let's delve into the possible reasons. Could the falling value of the dollar be the catalyst for gold's meteoric rise? Let's dive into this question. Traditionally, gold and the dollar have an inverse relationship. When the dollar strengthens, gold prices tend to fall, and vice versa. This is because gold is denominated in US dollars on the global market, so if the dollar weakens, it takes more of them to buy the same amount of gold, pushing the price up. Recently, we've witnessed a surge in gold prices, and at the same time, the dollar has been experiencing a downward trend. It's not rocket science to connect the dots here, but let's delve deeper. The dollar's value doesn't just fluctuate on a whim. It's influenced by a host of factors including inflation, interest rates, and the country's economic health. Right now, all these factors seem to be playing against the dollar. Low interest rates, rising inflation, and lingering economic uncertainty have all contributed to the dollar's weakened stance. This situation can lead investors to seek out safe haven assets, such as gold, which tend to hold or increase their value during times of market turbulence. But it's not just the investors who are turning to gold. The general public too seems to be losing confidence in global currencies, such as the dollar and the euro. This trend might be due to the economic instability and unprecedented events that have shaken the world economy in recent years. The trust in fiat currencies, backed only by the faith of the public, appears to be wavering. To sum it up, a weak dollar could indeed be a significant factor in the surge of gold prices. It's like a seesaw, with gold on one end and the dollar on the other. When one goes up, the other tends to go down. But remember, while the weakening dollar can contribute to the rising gold prices, it's not the sole player in this game. But that's not the only factor at play. There's more to this golden story. Central banks worldwide are on a gold buying spree. But why, you might ask? Well, it's an interesting trend that's been taking shape in recent years, and it's a story worth telling. You see, central banks, the institutions that manage a country's currency, short-term interest rates, and the nation's reserves, are buying up gold like there's no tomorrow. And it's not just any central bank, it's particularly those in China, a country known for its economic prowess. So why are they accumulating large reserves of gold? There could be several reasons behind this. One could be that they're looking to diversify their foreign exchange reserves away from paper assets like the US dollar. Gold, after all, is a tangible asset that holds its value over time. Another reason could be that they're trying to bolster their financial security. In times of economic uncertainty, gold is often seen as a safe haven. It's a way to protect wealth and hedge against inflation or currency depreciation. But here's the thing. As these central banks are snapping up gold, they're driving up the demand. And as we know, when demand increases and supply stays the same, the price goes up. So, their actions could very well be contributing to the rise in gold prices we're seeing today. And it's not just the banks that are getting in on the action. As these financial giants hoard gold, the public appears to be following suit. Individuals, seduced by the glitter of gold and its promise of stability, are also investing in the precious metal. It's almost as if there's a collective loss of faith in traditional currencies like the dollar and the euro. So the next time you see the price of gold rising, remember this: It's not just market forces at play. It's also a reflection of a broader trend, a shift in attitude towards traditional currencies, and a renewed appreciation for the enduring value of gold. As central banks hoard gold, the public seems to be following suit. So what will you do? Amidst economic uncertainty, the public is turning to gold as a safe haven. We're seeing a fascinating shift in investment strategies, a movement towards a more tangible, reliable asset, gold. In a world where economic landscapes can change overnight, people are looking for stability. And what could be more stable than the precious metal that's been a symbol of wealth and prosperity since time immemorial? Gold, unlike fiat currencies, is not subject to inflation or the whims of government policies. The current trend suggests that more and more individuals are abandoning the volatile world of fiat currencies. These include the likes of the dollar and the euro, which are proving to be less reliable in the face of fluctuating markets and economic instability. Instead, individuals are opting for the security offered by gold. This increased demand for gold is contributing to its surge in price. As more people buy gold, the demand increases, and with it, the price. It's a simple case of supply and demand, but it also indicates a lack of faith in traditional currencies and a desire for an investment that offers both safety and potential growth. Interestingly, this shift towards gold is not limited to individual investors. Central banks across the world are also adding to their gold reserves, a move that further solidifies the metal's position as a safe and reliable asset. In essence, gold is being seen as an insurance certificate, a way to ensure one's economic future. It's a safe haven in these uncertain times, a beacon of stability in a sea of economic turbulence. So, should you be joining the gold rush? The golden opportunity may be knocking on your door. In this ever-changing economic landscape, it's crucial to make informed decisions about where to invest your hard-earned money. One investment avenue that has stood the test of time is gold. Gold, often regarded as a crisis commodity, tends to appreciate in value during times of economic uncertainty. And this is precisely what we're witnessing today. With the recent surge in gold prices, breaking the glass ceiling of $2,000 per ounce and peaking at $2,200, it's clear that the precious metal continues to be a solid investment choice. But why should you consider investing in gold? Think of gold as an insurance certificate for your life. Just as you'd insure your home, your car, or even your health, gold is a form of financial insurance. It's a tangible asset that you can hold in your hand, and it's an asset that can't be devalued by inflation or government policies. In times of economic uncertainty, when the value of global currencies like the dollar and euro are in flux, gold offers stability. It's a safe haven for investors, a means of preserving wealth for future generations. Moreover, the trend of central banks, including China, buying up gold reserves indicates that these institutions are also recognizing the value and security that gold offers. This trend is likely to continue, further bolstering the value of gold. Investing in gold is not about making a quick profit. It's about safeguarding your financial future. It's a long-term strategy, a way to protect your wealth from unpredictable market fluctuations and the eroding effects of inflation. So, take a moment to consider this golden opportunity. With the current economic climate and the rising value of gold, there's never been a better time to invest in this precious metal. Don't be left behind. Secure your future by investing in gold today.